this is Kina Knisley with Team K Squared of Keller Williams, and I have Forest Knott with me today with eMortgage. Is that the whole name? Okay.
Yeah, eMortgage Capital.
So eMortgage Capital. We are going to talk about FHA loans today. So what is an FHA loan?
An FHA loan is a Federal Housing Authority, and it is a loan for anyone can use an FHA loan. It's most often used, I would say, by first-time home buyers, but again, not exclusive to them. Some of the benefits of an FHA loan are small down payment, 3.5%, one of the lowest down payments available, and they also go down to, in some cases, down to a 500 credit score. Now, you can't do 3.5% down for a 500 credit score. You're going to need to do 10% down.
So 10% down if you have low credit. But
yes.
if you have good credit, what's considered good credit?
Anything over 620.
Okay.
And the neat thing about FHA loans is the person with the 620 credit score is going to get the same interest rate and same loan parameters as somebody with a 740 credit score. So there's no difference there. When you go 620 down to 580, there are some stricter requirements as well as below 580. But typically anyone above 620 credit score is going to have a really good opportunity to buy a home using an FHA loan, because not only is it a small down payment, but it also allows for a higher debt-to-income ratio than on conventional loans.
So your debt-to-income is how much you owe in credit cards, car payments, and it includes your upcoming house payment,
right?
Versus what you make.
Exactly.
Okay.
Yeah, so we can see anywhere from 6 to 10% higher using an FHA loan, typically than conventional.
Wow.
So that helps people. Not to mention, they do FHA rates are typically roughly 3/4 of a point or 1.1% lower than a conventional loan.
Oh.
So that will make for a lower principal and interest payment. However, there is mortgage insurance, which mortgage insurance was lowered this time last year in 2023. So it's very comparable to the same mortgage insurance you would pay on a conventional loan.
So, but now, is there a limit to the amount we can buy? Can we go buy a $3 million house and only put 3.5% down?
There is loan limits.
Oh.
And every county has its own loan limit. And forgive me, we just changed in Honolulu from 770,500 in 2023. Forgive me, I don't have the exact number, but we're right around 780. Maybe 783, I think.
So we can go up to 780 and only have to put 3.5% down.
Right.
Wow. Okay. So it's a government-backed loan. Can you do an assumption with an FHA loan like we're seeing with the VA buyers right now?
Technically, I believe you can. I don't have a lot of experience with that, but I'm pretty sure that you can do an assumption with an FHA loan.
Okay, so what's the process if somebody wants to use this FHA loan? What's the process in getting pre-approved for an FHA loan?
Well, the process would be the same as any other. Meet with a loan officer, or phone call or emails. But you're going to complete an application. You're going to need to provide your income documentation, which if you're a W-2 employee is going to be your last 2 years W-2 forms and pay stub. You're going to need your driver's license and then 2 most recent months bank statements.
Okay.
So you want to show that you have both a 3.5% down payment plus a couple months reserves, because you don't want to show that you have just enough for the down payment, even if you may have a seller concession that covers the closing costs. That's another thing to consider. You're going to need closing costs in addition to your down payment. A lot of buyers, I'm not sure how much you've run into this, but there's a lot of first-time home buyers don't think about the fact that they have closing costs. They think about how much do I have for down payment, and that's it.
Yeah.
Your closing costs, on a $700,000-800,000 home are going to be $10,000 to $15,000 once it's all said and done with your prepaid property tax and homeowners insurance and interest and all that stuff.
So we are seeing sellers credits
Yeah.
to buy to help with closing costs. So that's great right now. I don't know how much longer the market's going to be giving us seller credits. I think as our rates come down, those sellers are not going to be as likely to give us credits for closing costs.
That's true, but what we've also seen and had great success with is in some more competitive areas and homes, the seller may not be willing to give up anything for a seller credit, but they're more than happy to allow you to increase your offer. And then, so for example, let's say you want to offer $800,000 on a home, and your closing costs are $15,000. Of course, we want to make sure that the appraisal will allow for it and the home will appraise for this amount, but then you can offer $815,000 to the seller and ask for a $15,000 seller credit. It's the same difference to the seller, but now your closing costs are covered.
Okay, so
I should clarify. You're just financing your closing costs, 96.5% of the closing cost, and you're going to be bringing in 3.5% of that number. But for a lot of people, that is a breaking point whether they can buy the home or not. They may have 3.5% for the down payment, but they might not have another 3% or whatever it is for closing costs.
So what happens if you just said, we can go up to 783? What if we find a house for 810? Can we still use an FHA loan even if it's a little over? What do we have to do to grab that house with an FHA loan?
Yeah, you absolutely can. It's just your down payment's going to be a little larger. You might be at 5 or 6 or 7% in that case. Now, something I suspect would come up later in the conversation, so I'm just going to touch on it, is there are down payment assistance programs.
Oh.
So there is an opportunity where there's a lender that will offer a down payment assistance program and cover that 3.5%, and it is a gift. It's a true grant. There is truly countless down payment assistance programs out there. I've been in the mortgage industry for 26 years, and this is the only one that I, really endorse. And it's because it's not a silent second on title. There's no repayment. There's no second mortgage you're making payments on, and there's no clawback, meaning you have to, keep it for 5 or 7 or 10 years before you sell or refinance. This money is forgiven on day one.
Wow.
So this is where it's really neat. In that example that you gave, you could do 3.5% of the $810,000 or $815,000, whatever the $815,000, as a free money given to you, and now you're only paying that little difference. So instead of covering the difference from $783 to $815, what's that, about $32,000, $33,000, you might only be covering a few $1,000 difference.
Wow. So, and then the rate's a little higher with FHA.
The rate's a little higher, and the cost is also a little higher.
So what are we doing to mitigate that?
This is the way I propose it to most of my clients is you're going to be at about a 1% higher interest rate than you would if you didn't use the down payment assistance. And I wish I had the exact numbers, but let's say it was you were using $20,000 in down payment. That was your down payment assistance. Actually, it'd be a little bit, on a $800,000 loan, it'd be closer to nearly $29,000 down payment. So let's say you get that money for free at closing. Now you're keeping that money in your checking account, but your interest rate is 1% higher. So your payment may be $400, $500, $600 more per month for this loan that you took. So you have to, as long as you do qualify for that payment, and you can stomach that payment for a bit, you can do what's called an FHA streamline refinance.
Oh.
You're required to make 6 payments on time after you close your loan, and which comes to 210 days from the note date. And at that time, you could do a streamline refinance. So we're at a unique time right now where we all know how high interest rates have gotten to. We've gotten some relief from where they were in October when they were, breaching the 8% range, but they are still higher, and we're expecting them to fall this summer and continue over the coming 2 years is what is expected. Now, nobody has a crystal ball. Nobody can make a guarantee of what rates will be and when they will be, at any certain point. But we know that the start rate on this program is about 1% higher than where FHA rates are right now. So we know that as long as rates don't go higher than they are right now, which is pretty well accepted in the industry, that we're not expecting, we're waiting for the first rate cut, likely in May. We're not expecting rates to continue increasing. Yeah, so we're kind of at, we've been at a level point more or less with some mild ups and downs over the last couple months. If we just, I sum it up this way. You can take that 3.5%. That might be, 20,000, 28,000, 30,000, whatever it is. Save that money. You're going to make 6 payments that, let's just say it's $500 more per month. Well, now you've paid $3,000 higher in mortgage payments over 6 payments for this loan. But if you save $28,000 on your down payment, that puts you at a net $25,000 positive in 6 months. And then you refinance, do the streamline refinance, which requires no appraisal and no income documentation. It's based off your original loan qualifications. Then you can refinance to that lower rate. The only criteria is you have to have made your previous 6 payments on time, and we have to be able to lower the interest rate by at least 0.5%. The other beautiful thing on that is we cannot bake a bunch of closing costs into the loan. The loan cannot exceed what your original base loan amount was when you bought the home 6 months ago.
Yeah, so if you plan on refi, we can't roll our closing costs in.
Right, and so what we do is lenders have, this is kind of getting in the weeds, but you have a whole rate table, and every rate has a price. And with taking a slightly higher rate, lender will provide a lender credit. That lender credit will pay or offset the majority of those closing costs. So when it comes time to do your refinance in 6 months, keep in mind, whenever you refinance, you skip a payment because you don't make a payment the month after. You're still technically paying that interest, but it's in arrears, so you don't actually make a payment to the bank. But on a streamline refinance, you might, depending on how much that lender credit is, you might bring in that one payment at closing. So it kind of is a wash, but the point being, you're not adding thousands of dollars to your loan balance by doing this.
So, and they can refi with no appraisal, no credit pull, any of that?
There is a credit pull.
There is a credit
There's
pull.
just no income docs.
So you don't have to it's not like you're having to dig out your W-2s, your bank statements again. Just
debt to income ratio doesn't matter. Credit score doesn't matter. Again, you can qualify with a 620 credit score. Let's say you had some obstacles and got some collections, and your credit score fell below 580. That's still fine as long as the mortgage payment itself was made on time. You're going to be able to close that loan.
So you could actually even go buy a car after you close on your house.
Yes.
And still refi 6 months later.
And that's the best strategy. That's why I tell everybody, if you want to buy a house and a car, just buy the house first, then buy the car the day after you close. You're good there.
Furniture, it waits till day of closing. No buying that furniture. Okay,
yeah. So it's just a great way. I tell people, particularly if you're a first-time home buyer and you may have limited funds, you don't have 20% for a down payment, or maybe even 3.5% for a down payment, or maybe you do have 3.5% or even 5% for a down payment, keep in mind, you're going to need furniture. You're probably going to want to do some renovations. You're going to want to leave money in reserves, because now that you own a home, you don't want to be paycheck to paycheck. You want to know that you've got a cushion there.
Yeah.
So that's why in that example, let's say you can get, let's say it was $28,000 was your down payment that is gifted to you. Your payment might be higher for 6 payments, but your net is going to be, $25,000 left in the bank to go do your renovations, buy your furniture, and have a little bit left over, hopefully. So it's a really neat way for people to get in.
Yeah, and now would be a great time to buy with the FHA loan while we're still getting the seller credits, while you're still kind of getting a good deal. And then in 6 months when the rates come down, you refi into that lower rate, and you've gotten a great deal, and now you have your low rate.
Yeah, it's especially hot right now for what you just said, because during COVID, when, in 2020, 21, when rates were so low, the market was so competitive, multiple offers, they were taking those, all cash offers or the 20% down. Now they'll entertain the FHA loan with 3.5% down, which this opportunity might not be there forever. When the market gets very competitive again, they may kind of turn their nose up to an FHA 3.5% down,
exactly.
even though there's nothing wrong with it, and they close just as with just as much consistently,
and they end up with the same amount of money. Do you hear that, sellers?
Yeah.
You end up with the same amount of money when you close, regardless if it's FHA, VA, USDA, or conventional, or even cash. So.
Yeah, and the myth that FHA loans are more hoops to jump through or take longer is not the case. I routinely close these in 14 days.
Yeah, and it's not any harder of an inspection. You don't need more repairs. So all those myths are not true. Well, this has been great. So yes, if you have any questions about FHA loans, reach out. I'm going to throw Forrest's contact information here at the end of the video. So remember to subscribe to our channel. We got a lot of great information out there for you. You can follow us on Instagram, TikTok. Forrest also has a great TikTok. I'm going to go ahead and throw his on at the end of the video also. And if you have any questions, please reach out. But thank you so much. This has been great.